Tuesday morning. How is everyone doing today? Good morning, Donald. Good morning, Patrick. Good morning, Royal Palms. Good afternoon, Charles. Good morning, Sterling. Sterling, thanks for putting in the headlines. Good morning, Jacob. All right, yeah, the IMF projects slower growth. Yay. What do we got going on so far? Very, very quiet, narrow trading range today. Not much coming out. We had the NFIB Business Optimism Index coming in slightly better than forecast, but a little lower than previous. Redbook, that was not a good number by Redbook, and see the trend is very much down from the earlier few months. So Redbook will be coming in at 1.5%. We got Harker not talking till the cash close, and Cash Kari talking tonight. So there's pretty much nothing else coming out today. Heat map, Tesla up a bit, Amazon down, your mega caps mostly down besides Tesla. Slight rotation in the healthcare and energy. Financials a little strong. Remember, big earnings this Friday with really kicking off first quarter earnings season. Basic materials, energy, and financial leading it higher. Technology so far on the pullback. Fed Watch tool, 22 days from now, 70% for the rate hike still. What is the probability? What are the probabilities? So we have one rate hike either for May or June. Then they cut July, September, but where does it have it by the end of the year? At the end of the year, back to 4. So this is rising a bit, 4.25 to 4.5. So if they hike, that would be a full basis point cut by the end of the year that they're projecting. Still in greed mode. In terms of gamma flip area, it's 41.18. We're trading 41.36, so we are in positive gamma. So again, continued rally gets dealers selling into them. And the major put area is still 4,000. Minor put area is 4,100. So 4,100 still being very key support. CarMax and Albertsons, I was behind this morning, did not get a chance to check them out. So I will be doing that after the open, and then nothing after close. Nothing really now till Thursday. Nothing really till Thursday. And we got the CPI numbers tomorrow. So you see here, very, very quiet, narrow range. Still hoping I'd love to get up to 75% harmonic. 41.53 is my target, my first target on any rally today, and then 41.62. I'm just relying on the harmonics. Breakdown area, yes, you're into a clear path move. It needs some momentum. The key area I'd be watching going into the open would be about this 41.33 area. And then I just use my short-term harmonics. And when I say short-term harmonics from yesterday's rally, I'd be using 41.24 and then 41.17 on any lower. And the breakout early warning area is about 41.43. You can see not only is it the 62.5 harmonic, was prior major resistance besides that little end of the day pop and then the sell-off. So that's what I'm paying attention to right there. Let's see who else has jumped in. Good morning, Paul. Good morning, Options 22. Good morning, George. Good morning, Anissa. Hey, business person. Thoughts on hedge funds being the shortest on ES they've ever been? Well, we could get another pop up higher. It just really, everything's going to be driven by the data. I mean, if the CPI comes in better than expected, it's going to be the rate cuts will probably drop back down to a pause, and we'll have a short-term buying frenzy, which means things would have to cover a bit of their short position, and we get another pop higher. This week's the data-dependent week because everything's trading on what they expect the Fed to do. And this is the last set of CPI numbers before we had the last non-farm payroll last week, which came in strong. Last set of CPI numbers before the Fed meeting. So everything's going to be dependent. Then we got earnings season kicking off. So it's one of those things that I'll just wait for from the bigger perspective. Besides looking for any intraday setups, I'll wait for some of the bigger patterns to trigger. NASDAQ still pretty much is 13.2 first level, then 13.250, then 13.229. Those should be easy to remember. 13.200 is the key breakout level. Back to the downside, going into the open, I'm really focused on about 13.125. We get below there, I'm just going to use my old harmonics, 13.101, then 13,052. They're lining up pretty nice. Again, and same thing as yesterday, I would avoid if we get some momentum, that's fine. But other than that, based off earnings and CPI this week, I'm waiting for not to get chopped. We do have a potential double top in the Dow, but that trigger point isn't until a close below 33,486. Before that, any rally, I mean, the Dow holding up better over the last couple days, so it's showing sort of a rotation into some safety. Dow targets again will be yesterday's high and the harmonic around 33.24, then the 33.882 area. Support 33.740. If we break down below that, the minor support then about 33.7, and then 30. This is what a mess. The last sort of line in that sand is about 33.683. Russell on a rally, watching the 1799. That's a 62.5 harmonic. On a pullback, remember, if we start getting any kind of substantial pullback, I'm looking to Russell first for weakness, but 1780 will be the pullback level. Spiders, which again, with the doubles pretty much done at this point. So on any pullback, the minor gap fill 30, 409.61, 409 is very major support. 409 right in here. You break below that, you still have support about 408.65. And then it would get a little interesting below 408.65 to the upside. Let's just see where we sit. 409.94, just about where we're trading pre-open. 410.42. And then back to 410.82 to 411. It'll be nice to, when we get out of some of these ranges, a little gap down projected in with early market trading in the Qs. So 317.87 to the upside, which is 318 is major resistance. Above 318, we're looking back to about 319 and then 320.50. To the downside, your support is 315.87 to 316. Not getting anything, but even below there, you have support 314.21. Ugh. Some days it's just like this. I already had that earlier, Jacob. The gamma, we're in positive gamma mode. I already talked about that earlier. VIX. Again, caught between 20 and 1850. So those are the two key levels. As long as we sit in this range, it's just low volatility. The thing I'm watching is a break above 20 with momentum, or if we get below 18, it supports the bull case. Other than that, it's just intraday price action. I'll look at the tick more so than anything. The DAX. Finally, we have the really nice potential double top pattern. So earlier than that, we have the gap up with the reopen from Easter Monday. The earlier thing I'll be watching for is the gap fill, the 15,742. The trigger point for the double is a close below 15,628, which gives us a pullback potentially to a prior breakout zone. So that's what I'm watching with that. The notes, again, cycles rolling over. I forgot to mention on all these things, the daily cycles are still turning up, so we still have some upwards pressure in the S&P, in the NASDAQ, and also you have weekly cycles. NASDAQ weekly is trying to turn over a bit early, but S&P, forgot to mention, is getting to the top area, and I'm focused more on the cycles with the S&P. They have been running a little stronger. Now, back to the notes. The notes, weekly cycles at the top and rolling over will be interesting to see with CPI coming out, and daily heading down, but so far still holding some support. If we break below 115 is my next target. Dollar index pullback. Again, rotation zone still holding. Rotation zone, and we still have an inside day. So I'm watching yesterday's low about 101.56. If we break below that, which even if you don't trade the dollar index, that's fine. But keep an eye on 101.50, and then 101.34.9 takes us into potential double bottom territory. So I will be focused on that with some severely waning momentum. Crude still holding up, still watching last Monday's key low. Any pullback would be back into a rotation zone, and the rotation zone in the 50s still above the gap fill, so I'd be only looking for a partial gap fill at this point. Looks like it's still trading in overbought cycles rolling over. The only thing I'm still watching for the upside is a breakout. The early warning breakout is about 81. Natty gas, a little stronger, but still basing above the rotation zone. If you're looking for something here, I'd wait for that break above about 225, 224. Gold, not much. I mean, if it does get a break with momentum above yesterday's high and follows through with a close, it's a percent B buy. However, based off where everything is, with weekly cycles at the top, you got to be aggressive with raising stops and targets. Where else do we sit? Yen, pausing. Remember, confirming the double. And yes, some people will trade this as an inverse head and shoulders, but this is an upward sloping neckline, so it still qualifies as a double, which is better. But not confirmed. It still needs a close above. I mean, it's confirmed, but it's not triggered. Still needs a close above 133.76. Euro. Where's my... There it is. Euro rotation back up. Still watching how it's closing in regards to yesterday, because that would be a percent B buy if it closes above 109.17. Same thing with the pound. Needs a close above 124.4. And that would also be rotation back up after a multi-day pullback. Bitcoin spiking up and trading at this 30,100. Still watching for a significant rollover play in Bitcoin, but so far it's just trailing with a breakout. Tesla gap up. That does not still invalidate the massive potential double top. We still have a gap left behind, by the way, back to 192.58. So that's still going to be a potential magnet price. The upside, the target before that, I'd be using about 190.50. On any rollover market weakness, it would be a gap to the downside, 184.51. But other than that, there's no longer term patterns. Cycles back to the bottom on the daily, still at the top on the weekly. All right. All right. Good morning, Christoph. Thanks, Jacob. More bull. Again, everything's going to be trading, especially tomorrow morning, off the numbers. Until then, I would still rely on the cycles more than anything. with the S&P, so we can still see some choppy upwards pressure. Just to recap, tomorrow we got the inflation numbers, which is bigger than we have the FOMC minutes, which will still give some insight into what they were thinking from the last meeting with, all right, are we still going to be on the one more hike to get us that key area they've been targeting, and then the extended pause, which the market's not pricing in. It might be pricing in one more hike, but it's not pricing in an extended pause. Thursday, not just our weekly jobless claims, but we have the PPI numbers. Now, those are more minor to the CPI, but it will be interesting because it's still forecast to pop back up from prior. And then Friday, not only do we have the really strong earnings, not strong earnings, I should say the significant earnings between JP Morgan, Citi, Wells Fargo, PNC, BlackRock, and United Health, which can be substantially market moving. We have retail sales. We have Waller speaking in the morning. We have consumer sentiment. So that's what I'm saying. Tomorrow really starts kicking off the tone for the rest of the week. Let's revisit Intel. At this point, you know, it's holding the rotation zone. If you're short term, I'm keeping an eye in relative to yesterday's high, but that would be for just a potential short-term top, and then I'd be watching for a potential double top pattern. Finally coming out of overbought mode. As long as the semis keep getting the love, still SMH, big rotation up yesterday with a confirmed %B buy and another gap up this morning, which looks like it's going to take it to triple top territory. So if that holds up, there's still the rotation up in Intel, but it's running out of momentum. So I'm still getting very cautious because semis could get really beat up on another rollover play whenever that happens. With that, that's where we sit for now. Let's glance at Apple because that got beat up yesterday. Apple looks like a slight gap up. Again, I'm going to be watching for, even if Apple does pop over the next couple of days, for a significant double top pattern. And we're going to wrap it up. Just keep watching. If it gets through, it's a breakout, but you're trading against very strong resistance. It's really got to get above this 30-60 area to really get something. And yes, that is, you can use the modified head and shoulder rules with this for targets to the upside. You have to use a flat neckline. So 31.35, 31.95. And then I'd be focused on this 200. I would not use the final target. I'd be using these two targets in there for at least stop raises. With that, weekly also, you're going against the weekly rotation zone. And the weekly flat 200 is at the second target. So just do not ignore that 31.35 target. All right. I will talk to everyone later. Have a fantastic trading day. Bye for now.